Good morning, good afternoon, good evening. Today, we're going to be outlining the week one of this portfolio finally being functional and fully utilized. We're going to go over the previous videos, investment strategy, the main outline being utilizing the full $12,500 that was actually put into this account by December 16th, which as of recording was a couple days ago. Utilizing margin with that in order to speed up the income. I said there previously I would use 50 to 60%. Congratulations, we have usurped that. I'll go into detail more on that. And to overall reach a solid round number of about $1,000 a month, or about, since we're doing weekly dividends, $250 a week is what we're striving for in this early stage. The main outline of this video will be the core income positions. If you look to your right, you can see the core income positions that I'm currently in, the amount of shares that I have. I will explain why I bought more of certain things, less of certain things, and even why I didn't even buy any of certain things. I will also talk about the margin. Like I said, we have usurped it. We are doing even more margin than I expected, but it just kind of fell that way, and I'll explain how. The satellite income positions that we have, if I scroll down real quick on Robinhood, you're going to see there's a whole lot more satellite income positions. I'll explain why I suddenly have way more satellite income positions. And you can even see, if you look on the right hand side, I have developed, or I have picked my first satellite position, put quite a bit into it, and I'll explain why again later in the video. For the video recap, since we already did that part, let's just get into the core incomes. The core income positions are YMAG, YMAX, and RDT. So the YMAX I bought more into, and if we look into here, my average cost has, I think, gone down, but I have nearly making up 35% of the whole portfolio. So it is a lot more than I would have thought. But the reason why I bought it, why I bought more of that, and instead of equalizing it with YMAG, there's actually less of YMAG. YMAG was actually doing well. As you can see, total returns 2%. I didn't want to buy it more because in my head and my trading philosophy, I will explain later on, it is actually in premium currently, and I only want to buy things when they're either at a median or slightly below at discount. By my measurements, YMAX was at a discount at the time of purchasing it, so I bought it. And RDTE was, relatively speaking, also at a discount, and I had to establish the position, so I also bought it. When it comes to these other positions, we have NVIDIA, which I have now established a position on with 21 shares, being about, I think I put in at the time $500. It's up a little bit, cool, whatever. But reason why I wanted to buy into NVIDIA yield max strategy was, number one, it fits my parameters, and I'm going to explain the parameters for buying into any of these funds in the satellite and even in the core positions. The reasons why I would buy a fund is mainly, number one, it has a higher dividend than Cornerstone being 15 to 20% with a guaranteed drip. So it has to be higher than that for me to even take on the risk of buying something else that's not Cornerstone. NVIDIA has, from what I've seen, isn't it closer to 50 something percent dividend yield? So it's very high. It is also currently, by my metrics, currently at discount right now in comparison to its 52-week highs and lows, or compared to its median income or median price, sorry. So saw it as a good opportunity and I bought into it. For the margin strategy, I will now explain how much I'm using. It is over, let's bring out the calculator real quick because mess. We have 12,500. Oh, that is a lot. We have 12,500. Take this number, 8,538 divided by 12,591. I'm using 67% margin at this point in time. That is higher than the 50% or the 60% that I said that previous video. And I was surprised too. However, it just kind of flowed that way. NVIDIA was a good buy at the time, so I just a little bit more. If you look at the margin total, in Robinhood, you don't actually get that margin total exactly like a perfect round number like that. That perfect round number is based on me. I set that margin total because I never want to go above, specifically, I'm pretty sure this is like, what is that? What is 9,000 divided by 12? 12,500 is 72%. So I never want to be above that 70-ish% threshold because just asking for a margin call, honestly speaking, with full transparency here, I'm asking for a margin call right now. All it takes is one downturn and I'm in a margin call. But we're in a bull market, and by my experience from previous attempts, this is a pretty good point. Would I recommend you to do this? Hell no. But I just have a lot more capital at the moment to want for this to flourish a lot faster. Never take what I say with financial advice because I'm just showing you my journey and my experience. Now, for buying these, there's a whole lot of them, and I might do a video explaining when I will buy into them, why I will buy into them, but I feel like that would just be one, tedious. But number two, probably just want to see them being bought and explain to when they're bought. Similar to NVIDIA, I bought it at the time. It was below its median price. And that's why I bought it. Same thing goes for these. All of these funds that I'm currently scrolling through in the satellite income positions watch list, they are all above 15 to 20% in dividends per year. And they were below their median price or below my metrics. I would have bought them by now, or would have just bought them by now. Now, the amount that we're getting in dividends, I haven't completely calculated it, but we can see on the left-hand side, the estimate that we have is $730 a month, which is cool. We're getting there. We're getting to $1,000. So that is quick math. Put the calculator again. 730 divided by 4, and we have $182. So we're nearly at the $190 to $200 mark. I will try my best to contribute, but like I said, I want this to funnel itself and just pay for itself slowly over time throughout this journey. So that's how we're going to play this. Accuracy to which this left-hand side amount is, I wouldn't take it with much grain of salt at all, to be completely honest with you, because it fluctuated so hard. If you look at the previous episode, thank you again for the support on that, by the way. The comments, I read all of them. Try my best to read all of them and respond to all of them. But if you look at the yield on cost in that previous episode, it was damn near 60. Now it's 40. So there's a huge difference and a fluctuation between the weeks and the months. And hopefully, as I this journey week by week, show you the buys, there's not really going to be much sells, to be quite honest. There might not be a sell, but show you the buys, the reason why I buy more, or I buy less of something, or I buy a completely different thing. Yeah, it'll all be shown in YouTube. Honestly, we'll be posting more on the post side, so please check your feed on YouTube. I'll be posting not only the dividends when they come, just like in the previous post. Again, thank you for the support on that. But I will also be showing the buys that I make and the potential income that I make. So it'll all be shown through those posts, not YouTube videos, but posts. Now, for the goals of next week, since this coming week, Friday, but since Robinhood is so fun, they basically pay me late Friday, early Monday. That money will be used to buy stock is below my specific metric, the median price, and what I deem valuable. The danger that I have actually considered is things like CRSH, which are inverse funds, and fiat and dips, which are inverse funds of this one, I guess, being Tesla. It is shorting it. And since we're at a bull market, it is basically getting steamrolled, as you can see, throughout. It is just being absolutely steamrolled and pummeled all the way down. So by my metrics, this looks absolutely amazing to buy right now. High risk, high reward. But I don't think my form of investing or metrics does well under inverse options. So I will, until I'm proven wrong and we see a correction, I will continuously buy only funds with underlying assets that are appreciating at the time. Example, AMZ, OR, Palantir, guessing MicroStrategies. Moderna is also another play that I've been considering, but it has been pummeled so ridiculous that the risk of reward is quite huge. And just by its metrics alone, it had a 52-week high of 26, but a 52-week low of 482. This thing is as close as we can get to a reverse split, like basically asking to reverse split if you buy this. But that's neither here nor there. That's just me. It's my personal opinion. I don't know if it's going to hold up. I sure hope it does. I don't have any stake in it at the moment, but by my metrics, I would probably put in a little bit of money in this just to see if the change in strategy will help out. In other news, we can also about the new index funds from YieldMax that's coming out. Seen a couple of YouTube videos on it. I am intrigued. However, there are two things that are making me consider never touching it until probably a couple months when they reduce the maintenance. Number one, it's because I'm using margin to buy these at the moment. So margin, and it has 100% margin maintenance requirement. So $1, and if it goes down, and there's a large track record of many funds being bought at such high, ridiculous prices and over time, and not even over a long period of time, we're talking weeks, this sucker could fall down to 30, 20, and like $5. Now, I don't know about you, but a 90% decrease would me inside. So yeah, so I wouldn't consider it. But that's basically what's happened with the portfolio so far. I will update y'all next week on number one, the dividends, what we're going to buy, and hopefully reaching 1,000. We'll see you then.